Hey everyone, Chewy reported fourth quarter fiscal year 2023 results after the markets closed yesterday. So in this video, I will be reviewing those earnings results. I'll also update my buy recommendation for Chewy stock. I recently upgraded Chewy stock to one of my top 10 growth stocks to buy in 2024. So you're going to want to tune in to see if I'm keeping it rated as one of my top 10 growth stocks or if I'm downgrading Chewy stock after what was relatively disappointing earnings results that sent the stock price down by 6% following the release. Frankly, I'm surprised the stock price didn't fall by more following the earnings release, but let's go into the details and let's see why that's the case.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, Chewy reported fiscal fourth quarter 2023 net sales of 2.83 billion, which was an increase of only 4.2% year over year. Gross profit margin expanded by 10 basis points to 28.2%. I've been commending management for the job they've done in increasing their gross profit margin over the last few years. Overall, I've thought that management has done a good job with this company. Net income of 31.9 million was down year over year. Net sales for the full year of 11.15 billion were up 10.2% year over year. So you could see that growth rate is slowing down meaningfully from 10% for the full year. It was up just 4% in the fourth quarter. And for its fiscal year 2024, Chewy is forecasting just 5% revenue growth at the midpoint. So growth is slowing down to be sure for Chewy for fiscal 2024. And I'm going to highlight some of the reasons why that's the case a little bit later. Gross profit margin for the year of 28.4% expanded 40 basis points year over year, and net income came in at 39.6 million. So Chewy over the last few years has turned this company from an unprofitable growth stock to now generating solid profitability on the bottom line, and management said that they expect to continue expanding net income and free cash flow going forward. That's the good news. So some of the bad news was that net customers or active customers decreased by 1.6% year over year to 20.1 million. The reasons for this decline are severalfold. First, Chewy added millions of new customers when we were in the lockdown stages of the pandemic, as in-person pet stores were closed or shut down, or people were avoiding going in person, and Chewy benefited as a result. So, as is normal with any business, every year you tend to lose some of your customers. You don't keep 100% of your customers. And if you're growing, the hope is that you add more new customers to offset those customers that you're losing. The difficulty for Chewy is that it added so many customers in 2020, in 2021, that these newer customers that they're adding in 2023 and early 2024 are not enough to offset those losses from the cohorts from 2020 and 2021 because they were so many. The cohort from 2020 and 21 was so large. So that dynamic is causing an active customer decrease overall at Chewy. Secondly, the overall trend, home adoption of pets or pet adoption or the pet market, is slowing down considerably. Many households that adopted pets in 2020 and 2021 have unfortunately took them back, right? And newer households are not adopting pets at the same rate or not bringing home pets at the same rate that they were a couple of years ago. Several factors are playing into that trend. Number one, people are not spending as much time at home anymore. And probably more importantly, the cost of owning a pet has increased substantially. You thought inflation was bad for the things that you buy for yourself. You should take a look at the pet market. Pet foods and taking a pet to a vet have gotten so expensive that some households are choosing not to have a pet anymore. That's expected to remain so for the rest of 2024. According to Chewy, they expect the pet market to slow down considerably in 2024. and then they expect a rebound in 2025 and 2026. So another good item for Chewy is that the net sales per active customer increased by 11.9% to $555 per year. I told you it is expensive owning a pet or having a pet. And the good news for Chewy is that its customers, with each year they stay with Chewy, they spend more and more and more as they mature as a Chewy customer. They get more acclimated with the platform, they get more acquainted with what Chewy has to offer, and they purchase more and more products from Chewy. Also, on the other side of that equation, Chewy has been expanding its offering for clients, for pet parents, and there's more that pet parents can buy from Chewy, and therefore they've been increasing the amount they spend with Chewy. Also, the company's getting really good at generating cash flow now. Their net cash provided by operating activities increased by 136 million year over year to 486 million, and the free cash flow increased by 223 million up to 343 million. And one of the better aspects of Chewy's business is that such a large percentage of its sales are from Autoship customers. This is similar to the Amazon subscribe and save feature, where people just subscribe to items that they know their pet is going to need every month or every 2 weeks, and 76.2% of their sales were Autoship. Now, why is this helpful for Chewy? It's easier to run your business with more predictable sales. If you have 76% of your sales coming from Autoship, that means every month you know that this customer is going to get this certain item. You can better plan your business operations. You can optimize shipping and logistics. You can optimize purchasing, inventory management, all of which allows you to earn better profits on existing sales versus sales that are more volatile and less predictable. This is an aspect of its business that I've been attracted to, and it's been one of the reasons why I recently upgraded Chewy to my list of top 10 growth stocks to buy. So here's what I was talking about I want to pay closer attention to for the outlook. So looking ahead, the pet category is projected to grow at a similar rate over a multi-year forward period, which is in the low to mid single digits. However, in 2024, growth for the industry is expected to be lower than the historical average. Unit growth is expected to be muted due to pet household formation trends that remain below historical levels. In other words, people are bringing home pets at a rate that's way below historical levels. And then as it relates to pricing, while they're not anticipating deflationary environment, they expect no material pricing benefit on industry growth in 2024. So this will result in a modest growth for the industry, but we expect the industry to return to normality in 2025. In other words, 2024 is going to be a tough year for the pet industry overall. Unit growth is going to be muted. People aren't going to be buying more things, and pricing power is going to be non-existent. They're actually talking about deflation here. So that's at least one area of relief for households that have seen the prices for almost everything increasing. At least Chewy is not expecting for pet prices or prices for pet foods and pet products to increase in 2024. However, that's not good news for investors, because one of the ways companies make increasing profits is by increasing prices. So that was not a good item to see when I was going through this report. And so given the muted environment for the pet industry for 2024, I was not surprised to see a disappointing revenue forecast for Chewy. For its next quarter, Chewy expects 2% revenue growth year over year, just 2%. And then for fiscal year 2024, Chewy expects roughly 5% revenue growth at the midpoint. Very slow growth for a company that's been growing at double digits or close to double digits for several years now. Now they're going to be down to the low to mid single digits. Now, thankfully, management has been good at optimizing their operations, and they expect earnings and cash flow to increase in 2024, even with this modest growth, and then 2025 for the rebound to continue. I can understand why the stock price was down 6%, and I was actually surprised after seeing this report that the stock price wasn't down by more, right? I would have expected the stock price to be down closer to 10 to 15% given the disappointing earnings report out here. So to update my guidance, to update my recommendation for Chewy stock, I'm still keeping it on my list of top 10 growth stocks to buy, but now it's very close to getting taken out of that list. I wouldn't be surprised if in the next coming weeks to months I remove Chewy from that list. I'm still keeping Chewy as a growth stock to buy. I'm still keeping it as a buy. Its forecast, its earnings per share expectations, if you look out for the next 5 years, analysts on Wall Street expect Chewy's earnings per share to grow by 25.86% per year for the next 5 years. So even though 2024 looks to be challenging, the next 5 years looks very strong for Chewy. So a disappointing quarterly earnings report, to be sure, disappointing outlook for 2024. I'm still keeping it in my list of top 10 growth stocks to buy, although now it's moving closer towards the bottom of that list in terms of the ranking of the top 10. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.